Good morning, traders. I trust you're all well. Just coming up to 8 a.m. on Tuesday, the 9th of June. And as always, a quick recap of our majors on a Tuesday morning. So as always, we'll start with the dollar index. Since breaking out of our 200 pip range, we had sort of 101 hard resistance, 99 hard support. There was some sort of minor levels in there, 140 and a couple of others. We saw this lower high formation break within our range. We didn't take action just yet. 2050 MA crossover, bears took control, breaking the 200 moving average. And in fact, since this last break till, let's see, we've had, a 9-day bear run, which isn't impossible. We have seen previous times before, but we really didn't get any sort of pullback, any possibility of getting in at a dearer price to then take this move and continue this move lower. So we've come to a position now we are holding back near support in and around that 96.40, 96 region. And you can see that the bear's definitely not in control anymore. How weak was we in here when we saw bearish bar after bearish bar, continuation bar, meet an exhaustion candle, then we started to see price consolidate. The last 3 days we haven't seen anything interesting, which, as I say, does clearly show the sellers are running out of steam. Now, as always, and if we look through historical patterns, the market never drops in a vertical line. We see cyclicity, we let the market breathe. It gives us opportunities to get ourselves in and out the market. So, as I said last week, we were due a pullback in here, let alone where we are now. So 97.50, anything in and around there would be a good opportunity to then take the market short. We definitely have to manage this on price action. So the way we are now, this is a consolidated area, and I do expect a pullback to happen. How deep that pullback is, we just have to monitor, as I say, on price action. But 97.50 would be an ideal area for price to retrace. A couple of bearish interactions, nice bearish engulfing bar lead the way, and we then take this opportunity back down to meet new lows. I do see this market going lower, yes. Diving in here, as I say, is jumping on a train that's already left. Be patient. This is when amateurs and new traders will lose money thinking this is still going down. You'll get a higher probability textbook, set up a dearer price to sell out with a reasonable area to tuck your stop loss behind to stay protected. And as I say, 97.50, anywhere between 97.50 and 98 would be an ideal opportunity, an ideal area to look short. Now, for some of you more, say, aggressive or more advanced traders that do typically like to trade a phase 2 retracement, you're in at the early stage right now. So how would you get in this? Well, as you can see, when we're cycling, and this was meeting our core strategy, fantastic. It's working well as we saw the sellers in control moving off the 20 moving average. So tons of trading opportunities last week. I know that, most of you did take advantage, whether it was a dollar index or a dollar pair across the board. But as we stand now, as you can see, this was the first indication we had that there was some sort of indecision approaching. Price then moved lower, continuing to make a lower low, lower high, bang. There's the second interaction we had. So personally, I stopped trading in here. I know we did catch a bit of momentum on the euro in this position, but where we're currently sitting, that's your breaker formation. So what was clearly making lower highs, lower lows in a downtrend has now made its first higher high. Hold fire, stop trading. Let's find our pattern. Let's move back to the higher time frames. Is price still selling? Well, just as we looked at the higher time frame, it was heavily bearish. So we're naturally waiting for this pullback. And as soon as we see a break of pattern and lack of selling like we did in here, we say, okay, now's the time we may see a potential reversal. Now, price is sitting, as I say, in and around this 96.60 support region. And we're just playing with this now. So how do we get in this? Well, I'd be looking at this as an area for price to break. So any intraday buying to give us an additional cycle after rejecting support. 1, 2, bullish price action, reject these levels, as I say. That will give you your opportunity to short-term buy, intraday buying opportunity into this 97.50 region. Now, as I say, this doesn't have to be on the dollar index. You can trade dollar short-term strength. If we do see this dollar retracement, dollar phase 2, there will be opportunities to get in. So what I don't want you doing is buying in here far too soon, because as we know, price could just consolidate, mess around before perhaps breaking even lower. We may not see that retracement that we actually want to see. So use this as your guideline now. Break above, break the high, so confirm you've got another higher high in what was a downtrend. Slight pullback. Remember, an hourly pullback can be anything between sort of 3-4 hours. 3-bar pullback's ideal. I like to trade a 3-bar pullback. Potentially by that point, the 20 and the 50 may correct itself. Of course, the 200 won't, being an extremely slow moving average, but that's how we identify an opportunity to trade. So bullish price action. I like to trade off engulfing bars, as you know, after 20-50 cross, off the 20, higher low formation above previous short-term highs into the daily 200 will give you a fantastic intraday trading opportunity. But obviously bear in mind this is a daily phase 2. We do expect messy price action. Price action is never clean throughout a phase 2 move. So just take this, as I say, you're in nice and early now, so be confident if you do want to take that position, but just weigh up the alternatives, look at every market possible. It will give you a clearer indication on the performance of the dollar and in this, this morning and throughout this potential pullback, which is well overdue. Obviously, the opposite of that being euro. From a daily perspective, where euro sits, we're back testing. Broke above this 112 level. And as you can see, look, similar story, right? We had our 110 resistance, which we've been using. We've been trading off the 110 for quite some time now. 110 resistance in play, 107.70 support. So there was our midterm range. We was buying here, we were selling from here. Higher low formation within this range, bullish price action, but we didn't take advantage just yet because we had this 110 as an obstacle. Price broke, and it wasn't long till we steamed through the daily 200 moving average, opening the doors for intraday trading opportunities. So remember, we took a lot of opportunities in this period on a 1 hour chart, as you can see, moving back to our textbook opportunity of the 20 moving average bounce, trading momentum. Once we understand what currency pairs are strong, what currency pairs are weak, that we were sport for choice in terms of intraday trading opportunities in there. So where we currently sit now, as you know, we're well overdue this pullback. So this 115 mark is a clear level of previously used resistance, just breaking previous highs too, that we can look to target. Now, weekly resistance, we do have this in mind as well. So you've got bearish trend line, 200 moving average, which price rejected twice now. So we would like it priced to break the daily 200. Obviously, seeing the dollar index drop off, a weak dollar will help this push forward. So anything in and around this area is intraday buying opportunities into 115. A break above 115, we open up the doors to extreme buying. We have to keep an eye on this. As I say, this is an obstacle previously rejected twice in the last couple of weeks. So I'm using this channel as just a guideline as a breakthrough and a breakthrough of that 200 moving average. A weekly pullback into 112 would be fantastic as a buying opportunity to go back into 115, 300 pip move there. I'm not too sure if we'll see a deep enough retracement. So just moving back to the daily chart, I just want you to use this now as your opportunity. If we can get to 112 and buy them, fantastic. But if price starts to consolidate, perhaps a buy stop order to allow momentum to trigger you in back higher could be an opportunity. I want you also to monitor this 4 hour time frame. If you look in here, pull back to the 4 hour, pull back to the 4 hour and 112. So anything in there could be ideal. Failing to pull back to 112, then we'll look for a buy stop opportunity. If we're consolidating off the 4 hour 20 moving average, buy stop and allow momentum to trigger you back in. As we know, markets can move quick, especially with the current volatility that we're seeing out there. So yes, I do see this market moving higher. As we know, we need a correction, a daily retracement before we do poke higher. We are in that corrective phase 2 trade. If you are looking at being an aggressive seller and looking to trade phase 2, then as you can see in here, you've started to show this range-based formation, which is an interesting one because as we've seen such strong buying in here. The buyers are definitely not in control in this period. So 112 does sit on the hourly 200 moving average, which is something that we like to trade. Now, what I would personally do with something like this is you can see we have an hourly range and you can see there is an opportunity to price to go both ways. I know that sounds silly saying because essentially it can only go up or down, but technically we have a reason for both, because if price stays in this range and it's showing that the sellers are not in control or not looking, or that the fight isn't strong enough, so we're not going to see that deep retracement to then buy, which still currently means that the buyers, which are in control, because technically we are still in an uptrend, are pushing price a lot higher. So I would look within this sort of short-term range. If we get a break above, I'd look to buy. Quite obvious. If we get a breakthrough, retest, anything down like this, it may be an opportunity to sell. And please remember, if you do miss that early opportunity in here, then you can definitely look for some shorter-term 15-minute cycles into that 112 region. There is opportunity to make money both ways. So again, not top of the list, and I do see this market moving higher, but while we're in this corrective phase 2 pullback, we just have to manage the weight of it. Will we see a daily retracement to 112, or will the buyers be too strong to allow price to get that low, that we see more consolidation, fight, break above and bounce? And that would be our entry into the market. Okay, cool. Let's take a look at pound. So pound's been an interesting one. So as we can see, price broke above 26.40, which was actually an area I was looking to short from. Double top formation. I mean, as I say, we did see this as a technical potential head and shoulders reversal in here. Price did peak higher, meeting 200 MA, 2640 double top formation. Saw a fantastic move low, and we did take advantage a lot in here. Failing to continue to break lows, higher low formation above 120. Remember, 120 was our initial target to short. We had a 600 pip trade that was in this period here. Now, pound's been extremely strong. I think the weak dollar on the back of risk on has definitely helped this. It's an interesting one now. We've got to remember pound has till the end of June to confirm Brexit negotiations, so that could trigger a pound move, definitely on the bear side. Where I currently sit here, I'm going to use 26, 40, and 20 as my zone to look for potential short positions in. Now, if the dollar does weaken off and we do see pound peak a little higher, then we may see an opportunity to continue long. Where I stand personally, I definitely feel we need a pullback, and then, as we know, seasonally we do see a pound rally in July, so we may just see this corrective phase throughout June or to the back end of June. Phase 2 formation poke higher. We may actually see a continuation pullback, use 2640 as previous resistance into support, and then get that daily run throughout July. So this will definitely be a buying opportunity in July, so bear that in mind, team. Where we currently sit at the moment, as I say, we're above 2640. The way the market's opened up this morning, we have seen a peak higher than the bears in control as we broke that high. So I'll be monitoring price action now. If we come back to 2640 and we start to range, show some bullish price action, then it may be an early entry to trigger this move short. If we see a break and retest below 2640, then that would be our interesting position to sell short. Now, I know it's just quite rare because usually I'm very decisive, usually I'm very assertive in terms of what direction I'm looking to trade, but we are at the beginning of these potential phase 2 moves after what's been such a bull run. So it is a matter of, yes, we're heavily overdue a pullback, and in fact, if I was a betting man, I'd probably bet on seeing a pullback before a continuation or some sort of pullback. But as we know, the market's been driven for various reasons currently. Aussie, Kiwi are a prime example of that. Kiwi's just been bombing onto the moon. So what we're looking for here, guys, is just get some sort of retracement and up we go. But just monitor price action. We are at a critical turning point. We're at the turn of a potential phase change. Until we see confirmation, there's not much we can do. We haven't got confirmation the market's going to continue rising. We haven't got, when I say confirmation, I mean we haven't got areas that we can weigh up to say, yes, this looks like it's moving long rather than short. And at the same time, we've had our first sort of bearish open in what's been such a bull run. So is this now the start of a corrective retracement before that eagerly push higher? There are a couple of markets I do like, and I'll just show you now. If Aussie and Kiwi drop off, Aussie weakness, Kiwi weakness, then look at pound Aussie. That's definitely due a phase 2. Look at pound, sorry, that was pound Kiwi. Look at pound Aussie. Definitely drew that phase 2. And if we're looking at price action in here, look, you've had 4 days of a range-based bar. Today we've seen a first bullish engulfing bar. So how we would trade that, guys, is this is the start of phase 2. So just like we was looking on that euro, there's your parameter. I mean, let's hope it breaks above the 200. 1, 2. That is your early aggressive entry trading the start of phase 2. Now, again, if we're trading strong versus weak, strong pound, weak Aussie. So what we want to see from pound dollar is pound dollar to progress higher. What we want to see from Aussie dollar is Aussie dollar to move lower. This is just a corrective phase 2 move. It's not a long-term move. Same as pound Kiwi, right? Pound Kiwi's broken out of this sort of range here. Pull back, bullish price action into that 200 moving average. So again, this is trading the corrective reversal phase with an aggressive entry. Bears are in control. We are still in a downtrend. We never see a vertical line this low. We have to see some sort of retracement, some sort of pullback. The 200 marks miles away, so short term perhaps to the 20 moving average and short. So what we're doing is we're highlighting this area here as our area to make money on the hourly chart. So if we do see, again, pull back, higher low formation, out of that sort of mark, up to the 200 moving average we go. Yeah, so this is why I show you the majors rather than going through all the pairs, because if we can understand direction of the majors, we just put 2 and 2 together and we make money. It works in that way. So Aussie dollar met 70 mark, previously met in December 19, so December highs. 70 mark, real bull run, pullback overdue. We know that, right? 68, 200 pip pullback would be the ideal place for a daily market to pull back to. and then back up again. It depends how weak this move really is. I mean, daily and gold bearish engulfing, which is fantastic. If we see this market close the way it does, then it will lead us for opportunities to pull short. I mean, I didn't feel we was holding well above the 200. As you can see, price was ranging. Then we saw bullish continuation exhaustion. I thought 68 would be the mark. We'll start to range and break, and obviously we moved another 200 pips higher to 70. So I know we caught the early stage of this move and the late stage of the move. The kind of middle stage we sat out because we didn't feel it was a technical high probability setup. But I know some of you guys did, so well done. Extremely overbought. Again, we need that pullback. So how do we get in this early phase 2, early changing phase? You can see there's your continuation through here. We've broke that continuation now, failing to make higher highs. We saw one peak higher, mess around, and a bearish move this morning. What do we need, guys? One or two things. Pullback to create a lower high below 70, opportunity to short into that 200 moving average. Got a fair 150 odd, nearly 200 pip move in here. Alternatively, if the bears do stay in control, boom, 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 then the 15-minute chart will look for nice pullbacks, just like we saw in here early this morning off the 70 region. Break lower, pull back again, down we go again. Yeah, fantastic early phase 2 move. Kiwi's obviously in a very, very similar position, guys. Now, Kiwi, I feel, is acting and has been recently more bullish than Aussie, so buying Kiwi is a preferred option. Just to knock you up to the weekly chart, you can see that we're still technically in, if we're looking at cyclicity, in a downtrend. I mean, this is a heavy phase 2, which could actually mean we may just see a short-term move lower and a break higher. So this would be a long-term head and shoulders reversal pattern. Could be an interesting one. I mean, 62.30 would be an ideal position to buy from, just like we saw back in September last year. So that could be an opportunity. We are still in this sort of bearish run. 64.30 short-term and bounce. It could be the daily pullback. So 64.30, bear that in mind. So you've got, again, sort of 170, 180 odd points to play in here. How do we get in this early? Same rules apply, guys. Let price break that 200 moving average. You can see that there's your there's your bullish continuation. Break lower, pull back, down we go, 64.30. That's your aggressive entry short. So pullbacks are looking good, guys. And remember, for some of you higher time frame traders, fantastic. If you're not typically a 1 hour trader or a phase 2 trader, just sit on your hands. Sometimes the best trade is not to trade, because if you're overdoing it and you're trying to force a position, you end up just losing money or giving back your profit for the week. So just sit out, wait for a 4 hour pullback or 1 hour pullback, and look to buy with trend again. Buying with trend, trading with trend is the most easiest way of trading. Dollar CAD. Okay, so dollar CAD, we saw similar positioning to what we saw recently on the dollar index. I mean, 200 pip range in here. Break below, 4 hour pullback, move lower. That 4 hour pullback was pretty textbook. Break below 38, this kind of 38, 60 region. Lower low, consolidation, consolidation, consolidation. This was an interesting one because I didn't take that first entry just for the fact that price has been going sideways, and we know how range-based that dollar's been prior to this sort of bearish breakout. And then we saw this move lower, fantastic, and off we've gone. So tons of opportunity, tons of buying opportunities to take, tons of sell opportunities to take advantage throughout the last couple of weeks. And if you look at your hourly chart, you've got tons of bounces off the 20 moving average in here as well in recent times. So where do we currently sit? Well, same as most dollar pairs, we've had this strong bear run. It's very rare that we see this without some sort of technical pullback. Today, we know dollar strength is kind of in place. We've seen this first sort of bounce higher. Not confirmed yet. Daily bar hasn't closed. But if we move to the early stages of this move on the hourly time frame, it's definitely something we can look at trading. So the same rules apply. Let price break these recent range highs. Up, pull back into that 200 moving average. That is your early entry in the daily phase change. So daily phase 2 entry, early entry on the hourly time frame, giving us a high probability setup. Now imagine, and this does happen, this is a complete change of reversal, then your reward to risk is fantastic, because if we see a complete reversal and start to break in terms of dollar strength, which isn't unrealistic, we've seen moves like that previously, then your entry originally, you're entering the most aggressive area. Your stop loss is down here, which is in no man's land essentially if we're buying. And you've got all of this to gain as reward. So it's definitely a game of being patient, or for you intraday traders, you know you have the ability to get in multiple times. So you can trade this cyclicity within this move. But as I said, I am leaning towards selling dollar. So short-term pullback into this area, 3,600, 200 moving average rejection, move opportunity to move short. But short-term buying, as we are at the early position of phase 2, is valid, guys. Okay, dollar Swiss. Dollar Swiss. So interesting one. Again, we've been stuck in this boring 200 pip range. It's not really been showing much opportunity. I mean, we were looking for a potential break and bounce as we've seen previously in here. But if the dollar's overall bearish, Swiss has not been up to much. It's not top of the list. So if we have to trade this, break and retest of 96 would be the entry to go short. Okay, dollar yen. Dollar yen, as we said, this 108 mark. A break above 108 confirms buying. Break below 108 confirms selling. I do stick with that. I mean, price did meet highs of 109.84, so just shy of 110. Tons of intraday buying opportunities in here once we broke that 108 region. Now, it's an interesting one because we may see, or in fact, what we've seen is yen strength, because with risk on mode, these equities have been steaming higher. Now, as these equities, and I'll just show you the 1 hour chart, have started to show some sort of signs of a pullback, and other markets across the board have, we've seen yen perk up a bit of strength this morning, and definitely yesterday as well, as you can see in here. So break lower intraday opportunity off the 200 moving average was fantastic into that 108 mark, gave a 40 pip profit. But as you can see, when price was trending, when price was bullish, we had tons of buying opportunities in this area here. So 108 was the buying opportunity in the buy mark. So I'm going to sit on 108 and I want to sit on the fence here, guys. I'm going to say if dollar strength does move in phase 2, yen weakens off as the equities move high, then you may get a short-term 1 hour move high. It may come, make a double top, and then we get this break slightly lower. So 108, if we get a break and retest below, then I will look to be on the short side. Probably would rather be selling, to be honest. But again, I'll only sell once I have confirmation that I'm in this zone as such here. A couple of other markets that we've looked at recently. Gold, look how choppy gold's been. I do see gold, in fact, if we look technically, this 1700 marks a mark in an area we've been trading quite consistently, buying and selling from 1700 over the last year. That is an opportunity. Now, this could be the move lower that gold needs to correct itself before we move higher towards the back end of the year. So bearish price action, a couple of bearish engulfing bars to lead the way on gold. I won't go into too much detail on gold. I know a lot of the advanced members did last night, but this is what I'm currently seeing. Move lower, and then we peak higher towards the back end of the year. Oil, as we're looking to close the gap on the 40-41 region, 200 moving average there as well. I wouldn't mind being a seller here, pull back into the sort of 25 mark. If it can get as low as in and around this sort of $20 region, then fantastic. I'd love to be a buyer here and take the market back higher. We have seen the drive higher. We have seen the demand in oil increase, but it needs a corrective phase. This has been driving high on risk on sentiment, and we know we need this pullback, cheaper price to buy at, and off we go again. Equities, again, guys, is similar to what we said last week. Intraday buying is valid if you see a technical reason to buy or you see the momentum there. But again, definitely we need some sort of pullback. We need some sort of correction to go again, essentially. So anywhere between the sort of 3,100, 31 mark would be an ideal place to buy again. But again, short-term buying valid, correction well overdue. Okay, guys, any questions, get in contact, drop us a message. We're here to help. And fantastic. Have a lovely day and a great trading week. Please remember Fed news, Fed tomorrow evening. We'll be busy out there, lots to discuss. So I expect some volatility. Protect yourself beforehand, or look to trade Thursday morning. All right, guys, all the best. Take care. Bye-bye.